Stocks are down for the second session in a row after gaining in early trading. Traders are citing expectations for slower growth. But our next guest says that it isn't necessarily bad for equities, especially growth stocks, when we see sluggish growth. Joining us now is Bob Turner, Chief Investment Officer of Turner Investment Partners. He's in New York today to receive an award, Institutional Investors Award, for the top 2010 growth stock manager. So first of all, congratulations on that. Thanks very much for joining us. Let's talk about what you're saying here. It's not bad when economic growth is sluggish for growth stocks. How is that?
Well, it does sound somewhat counterintuitive that growth is slower, so why do growth stocks do well? But people gravitate toward those stocks that are able to have good earnings regardless of what's happening in the economy. So a company like Apple, for example, whether the economy grows 2 or 3%, they're still going to have pretty good earnings this year.
Why have we, Carol Master, my partner, and I have had time and time again fund managers here saying we love tech stocks, and we're going to rotate into the bigger, more quality names. And I'm about to talk with you about your picks. A lot of them are the big names here. Why are they still lagging the S&P? Why don't, if everybody's shifting into tech stocks and the big quality names, why don't we see the industry group beating the S&P?
Well, the averages aren't, but it's because some of the big ones are doing quite poorly. Cisco's doing poorly. Microsoft hasn't done very well. Intel lagged until recently. So that brings the averages down. But on the other hand, some of these mid-sized growth stocks that are really doing better versus the big guys are the ones that are doing pretty well. So if you've been in some of these stocks that have gained share, those stocks have done quite well.
We have seen, you mentioned Cisco, obviously. It jarred the market a bit last week. Google was, I believe, the first really big company to miss analyst expectations in this earnings season. Does it bother you that much? Do you pay that much attention to quarterly performance?
Well, as a growth manager, we certainly have to pay attention to that. So Cisco was a high-profile miss. Google did pretty well on the top line. They just decided to spend a lot of money on their growth, so hopefully that pays off. But a lot of these mid-sized companies, such as Acme Packet, Aruba, Riverbed, they all had spectacular quarters with earnings coming in pretty nicely above expectations.
And Apple, of course, always knocks the cover off the ball, although they tend to sort of lowball with forecasts and guidance. That's one of your top picks, and I want to get into these right now. Why do you like Apple? They have had, obviously, a stellar growth thus far, and the products have been almost, well, really game changers, haven't they? Yeah. Can they keep that going? Well,
I think so. And Apple, among all stocks, I think offers almost the best risk reward of any stock available. In terms of the risk control, is this company's probably going to earn over $30 a share in the next 12 months or so. So with the stock trading in the mid 330s, it's just over 11 times earnings with a growth rate that's 20% year over year. So with that type of growth rate, with that type of valuation, I don't think the stock goes down very much. And with ultimately the release of the iPhone 5 and some new products, the stock can begin to work its way higher. So we like that one just from a risk-reward standpoint.
The iPhone 5, do you think it's going to be something totally different, or will it just continue to be an evolution as the 4 was?
Well, I think it does need to have a little bit of pizzazz, and that's perhaps one reason why it has been delayed. Now, Apple never says they're going to release a phone at a certain time. It's always speculation, but it's normally been June. It doesn't look like June at all this time. So I would say some of the delay may be just finding ways to really make this a very attractive phone.
Let's talk about Salesforce.com. Obviously an incredible stock story, or if you look at the last 12 months, I think it's up 50%. If you look year to date, not so impressive. What's the story with Salesforce?
Well, we're a firm believer in the cloud computing and on-demand software, and Salesforce has been a real leader there. Saying that, they still only control a small, low single-digit share of overall software. We feel like everything ultimately will move to the cloud. Salesforce is a leader there. They've just had to digest their growth a little bit. As you said, the stock's been up a lot. Earnings have been very robust. Earnings are still projected to grow at 40% year over year, which is quite impressive. So the pause is healthy, we believe, and hopefully the stock begins to make its way back up as earnings continue to grow higher.
All right, Bob, we had one more pick we didn't get to, Fortinet. Hopefully you can come back on after you go and receive your award tonight. So again, congratulations, and thanks very much for joining us. Bob Turner there of Turner Investments.